Good morning, everyone. We are going to start in a minute. We are just letting the stream become stable. It is Tuesday, 29 December, and we are on the second out of 4 live sessions this week. And we are on the holiday season. So yesterday we talked about short-term trading, and we talked about 5-minute and 1-minute time frames. And we are going to look into new indicators today to add to the Infinity tools. So I think this is going to be a great option. Let me just pause this one. Let me know where you guys are calling in from. I see people from Spain, Belgium, Hawaii, more Belgium, Nigeria, UK. We are live with the first 50 people. A lot of people are sleeping in late during those days of Christmas and New Year's, and that's completely okay. I'm gonna log into the pivot scanner. And there we are. Maybe a little bit behind in the video, so I'm going to go straight to to my screen. And we are opening the pivots. As you guys see, I'm downloading yesterday's session, and we're gonna put the holiday season sessions on YouTube in my holiday channel, or like holiday playlist. We have 4 videos from last year, so feel free to check them out as well. And we are going to add for this year, so we get a more and more theory-based background for everyone. I think it's great. Last year we discussed hedging, motivation for traders, account management, and trading plan. This year we did yesterday short-term trading with the Infinity tools. Today we're going to look to extra indicators. For tomorrow I need to remind myself. We had a great other topic, and on Thursday we are going to prepare for 2021 in a very nice and structured way, like you can do once a year or twice a year, to make for yourself a plan, not only a trading plan, but also to make a bigger plan for the year, and make sure that you are getting your goals done. So it's a little bit less trading related, but it is great for that. Okay, we are going to go for the 15 minutes. We're going to zoom out a bit, and it's not really an indicator, but it is an important setting. As we discussed all the time on the daily sessions, we have the time zone sessions and we have the session breaks. Now, there's a couple of things that are, I think, very important, and one of them is the session breaks. The reason for that is that you need to know exactly when you're trading time. So what I also really recommend, but it is a choice, is to put the exchange time as the time of trading, and you will see the exchange time is UTC plus 2. UTC plus 2 is the current trading time, so it's 8 o'clock. And I don't know if you guys can see the top of my screen here, it's 8:10 also on my laptop. Now I'm currently in Dubai, and I'm 2 hours from trading time, so it's 10:11 here right now. Now the reason I keep my laptop and everything to 8:11 is because wherever I am in the world, I keep working from 8:11. So this is very important, because that's the start of the trading day. It's 6 o'clock in London, and in 2 hours London will open, in 1 hour Frankfurt will open, and we know that at midnight New York will close. So you have your whole day ahead of you. So this is something that's very important. Now all the other settings background, scales and style are things that you can play with yourself. So you can just choose if you like different candles, etc. The only thing is, I think, with the pivots is that it doesn't really save it for you. So unfortunately, you need to do those settings every time you come online. Now, I already asked before in the Go Live sessions, please leave your feedback. I think it's this button. No. The survey here, send feedback. You guys don't have all those buttons, but you should have this button, the send feedback button. And I want to ask you guys to click on it and to leave your feedback for everybody who's watching this live via the Go Live sessions. Please, if you watch a recording as well, of course, anybody who has access to Go Live, please let me know here if we were starting on time, if you think the information was useful, but most important, your comments. So with your comments we are able, let me just take a sip of water, guys. My lungs are still not completely healed and happy after my corona experience in October. Sometimes I'm really getting out of breath out of nowhere, and that's annoying. I can tell you that it's at least annoying, but it's a recovery time that can take quite a while. Slowly going to the gym more and more to build up health condition wise again. So yeah, please leave your comments. Please leave your comments because I'm reading all those comments, and we are making a new version 2 of the Infinity tools. We have some upgrades. What I said yesterday with the buy signals, they are coming in the cloud and above the cloud. Sell only becomes under the cloud, so we need to make sure that that's in line with each other. There are some questions about making this line automatically thicker. There's a question about doing the session breaks. That is not an Infinity upgrade, but it's a setting in the pivot scanner. So I'm gonna ask if they can do that as well. And then we have a updated template. If you guys have any other requests, please feel free. Now, add extra indicators, something we're gonna talk about today. Is something that we are not going to do by default on the scanner. So the point for this is that I don't want to choose one indicator for everyone to start using, because an indicator is very personal. The indicator Infinity tools is really my personal indicator, and I'm giving the strategy to you guys via Go Live and via the IM Academy. And reach out to me if you are watching this in another way and you're not yet part of the academy. I can maybe send you to the right people to get signed up for the academy and being able to watch my sessions as well. Now, if you have this tool, you can add all kinds of extra tools for you. You see here the list is seriously long. And I see here no sure thing. There's really a lot of different options. There's all kinds of things like RSI. People know a lot. There is stochastic and stochastic RSI. There is volatility index, was very interesting during the corona times, and also due to the president election. Volatility index was a really big player for a lot of traders. And here at the end you have, this is the Infinity tool. Not really a great name in here, but this is the Infinity tool. Now basically, if you are checking what extra you want to add, some people really like Bollinger Bands. Now Bollinger Bands, if I add it, I see exactly the Bollinger Bands on top of the current indicator. Now Bollinger Bands, if you double click on it, it will automatically come with the setting 20, and a multiplier of 2, or standard deviation of 2. Now you see the middle line, the median, as the middle line is basically an EMA 20. I would advise to turn that off, because you don't want things that are double. So you see this one is actually pretty close to our infinity line, but infinity line is calculated a little bit different than a moving average. Then we have the upper band and the lower band, and the color you want to have in the middle. So in this case it's blue, and I will leave it blue because it's pretty nice to have it. I see that I have I have my mouse and another mouse. Okay, so Bollinger Bands is for some people really a nice indicator to say, like, hey, if we are on top of the Bollinger Bands and it's too much outside, we are going to get a pullback. If we are on the bottom of Bollinger Bands, then we are going to get an increase. It can also stay on the top for a while before it comes down. It can also stay on the bottom for a while before it goes at least back to the middle of the Bollinger Bands. Basically, the price all the time is staying for 95%. That's the point with Bollinger Bands, it stays for 95% within the bands. So when it's in that 5% outside of the bands, the only thing we know is that it wants to come back inside. It wants to catch up in the middle sometimes, so even though we have a downtrend, even if that downtrend wants to continue, it's catching up in the middle sometimes, so we have some pullbacks, and a little bit time for watching. Alright, good to go, guys. So this is an example of something that can really help. We can go to the higher time frames, you can go to lower time frames. Indicators always adjust to that level. Now, if you know how Bollinger Bands work, Bollinger Bands can be a very nice addition to the Infinity tool. If you're seeing that you have a very clear uptrend, you can see when it's on top of the Bollinger Bands, it might do a pullback. If it's on top of the Bollinger Bands, it might do a pullback to the middle. If it's on top of the Bollinger Bands, it might do a pullback back again. And then the entry line is red. So we saw this yesterday on the shorter time frames. You take the ride till the entry line becomes red, and then you get out. And you really see that it's between the infinity entry line and the top of Bollinger Bands. So if it stays on that level, you're good to stay in, and just stay in for a long time. Guys, I need to take a little break. Alright, we are back. Let's continue. We have one question here. Is this a trading session? We have more of a theory session this week, 4 theory sessions, and then we are continuing trading on 4 January again, every single workday. Boss, when you're using the trend stop loss, does it affect the 0.01 per 100, even that the risk varies per trade? So 0.01 lots per $100 for accounts under $10,000 are a very good valuation. Some people mostly even do more, and it's not advised to do so. So you stay on 0.01 lots till you're on $200, and then you go to 0.02, and then you go to 0.03. You can, when you have $300, you can basically not twin trade with the $100 account because you cannot open half of your lot size. So you need $200 to really fully take care and cover of the trades that we are doing together, because they mostly have take profit 1 and take profit 2, and we are advising to do half of the stop loss, half of the take profit, half of the lot size to take profit 1, and half of the lot size to take profit 2. So you need $200 to do 2 trades of 0.01 on 1 pair at the same time. Then we do maximum 5 pairs at the same time, and the stop losses, even the trend stop loss, is not more than 200 pips. So that means that with 5 open trades, if they all go wrong, you are going to about zero. You will have a little bit of money left, you will not blow up your account, but you will go down a lot. But as you said, it's the risk to trades varies, because mostly it's not 200 pips, mostly it's 60 or 80, and it depends on the market, depends on the market volatility, and depends on the time of trading, depends on the pair, etc., etc. So that's why we are advising maximum 0.01 per 100 till $10,000. After that, you even want to go less, because you don't need that much growth anymore up to 50k, and when you are 50k plus, you probably will modify again. As much as I love you're doing the session, please don't push yourself too much. We can get the information later. Yeah, I know, guys, but I want to also just get through it. And some days I feel better than others, but it's very important to keep doing our sessions, keep staying on IM Academy, keep staying alive. So we have discussed Bollinger Bands, and I have a couple of other indicators to discuss. So what's very important is that you can only delete them by double clicking on them, and I'm going to do that again. So you have the Bollinger Bands, you have it added. Now there's no list of indicators because that's hidden. So you double click on it to make settings, then you click away the pop-up, and you will see that those dots stay on the lines of Bollinger Bands, and then you use the backspace or the delete button to delete that indicator. So that's very important, because otherwise you can never delete an indicator if you don't want to use them anymore. Now there's another one that I want to talk about just very quickly. Very quickly. We did this before, and that's the Ichimoku Cloud. Now, as you guys know, we have been using the Ichimoku Cloud, and I need to grab it by clicking on the lagging span, because that's the green line that's in behind. Now, lagging span is something that is mentioned before by other educators. I know that it's called the money line in some other educators' terms, because it's easier to spot support and resistance lines. So the lagging span, I'm just going to turn off all the other ones, just to make it clear which line I'm talking about. So you here see on the left side now, you see the green line, and that green line is called the money line. Now this is a good example here. You see that the price is plotted in the past. Now when that price is plotted in the past, it's very easy to see a support level here, because there is a lagging span high and there's a price high. Now here also you have a price high and again the price itself. So some people say, hey, I see a double, let's say a double confirmation that there's a that there is a support or resistance line. But to be really honest, that's not true, because it's just the same price projected in the past, but it's easier to see it. But I just want to say, you need still, before you draw a support and resistance line, you need to see at least 2 times the lagging span and 2 times the price itself. So if I go and zoom out, then I see here's the lagging span with the price, then I here have lagging span a little bit higher and the price again. I can say that that's the pivot level at this moment. That is a support and resistance line. So you need to have multiple of those. Now, why don't we need this one? Is because we have the pivot scanner, and with the pivot scanner you see that we have the pivot level, and here we have R8, so it's already drawing support and resistance lines for us. So the lagging span is not something that we need. Then the baseline and the conversion line, 2 very important lines for entries. When they cross, you see them here very small. When they cross, Ichimoku traders would say that there is an entry to the upside or the downside. Now, the infinity indicator that I'm made and I'm using is really a combination of information that I got over the last 5 years, and I'm really a fan of Ichimoku. So the only problem with conversion line and baseline is that they are very chunky, so it's not really smooth lines, because they are not really made for the current candles that we are using. They are made for the Ichimoku Heikinashi candles. Now, Heikinashi candles are a little bit different from the current candles. We are not going into details about that in this session. But they were a bit too chunky for me for the normal candles. So for that reason I've been switching to all kinds of different moving averages, and there's about 7 of them, plus all kinds of modifications. And then I said, okay, I want to use specific average of moving averages, and I want that line to be just one line changing color. So actually the baseline and the conversion line were the inspiration of the Ichimoku entry line, but it's just one line. It's making a different calculation and it's changing color, so it's easier to see. No crossings, just the color itself. If it's green, it means up. If it's red, it means down. So that's where that comes from. And then the cloud itself. I'm going very shortly to show it, and I think that you guys can already see. If I'm zooming in, you already see that my cloud is, in this case here, a little bit shorter, and here on top it's a bit thicker. It has like a little bit of a modification, and that modification comes from that the Ichimoku indicator was created when there was a 6-day market and there was 12 hours of day of trading. So that's a very big difference with Forex nowadays, because Forex nowadays is 5 days a week, 24 hours a day. So you can calculate the difference. There is a very big difference between 6 times 12. I think it was 12 or 8. I'm honestly not really sure at this moment. But from the calculation, let's say it's 12. 6 days 12 is currently 3 days 24 hours, but we have 5 days 24 hours. So we need to do a little different calculation for Ichimoku, and therefore for the cloud I've made a modification to be on the same averages, because what a lot of people do wrong is they don't program, and that's okay, I understand that. But if you don't program and you start to play with those inputs, The problem is if you don't know what you're changing into an indicator that is not supported by anyone else. And if it's not supported by anyone else, it's not going to work on the market. Oh, guys, I'm very sorry. This is harder than expected. We're going to do one more indicator after this one. And then you guys are going to get the rest from me in another moment. Because this is a bit heavier session than expected for my lungs. I hate the struggle. Okay, so the most important thing is also, let's say with Bollinger Bands. You know, Bollinger Bands is an average of 20, and the Bollinger Bands top and bottom is a difference of 20. So a lot of people are using Bollinger Bands 20. A lot of people also use Bollinger Bands 50. There's probably people that are using Bollinger Bands 100. But if you want to use Bollinger Bands 43, and no one else is using 43, I can tell you the market is not going to react to your Bollinger Bands 43. The top is not the top, the bottom is not the bottom, and the middle line is not the middle line, because if no one else is using Bollinger Bands 43, the market is not going to react to the pullbacks and the expansions that you are expecting your indicator to show you. Because at the end, there's a lot of people that are doom thinkers, as I say. They are basically saying you cannot win in the market anymore, retail people cannot win anymore, everything is decided by robots, everything is decided by the big banks. I don't really agree, because I've been looking inside of those kind of companies for the last 5-6 years, and at the end, if you walk on a trading floor in a hedge fund, there's people. And if you walk on a trading floor in a bank, there's people. And they are using or fundamental analysis or technical analysis. And if they're using technical analysis, they are maybe using Bollinger Bands. And a lot of people are thinking, no, you know, in the banks they would not use RSI and Bollinger Bands. Now you will be surprised how simple indicators some of those people in banks with insane amount of money are using. Like, I've seen people using Bollinger Bands and RSI managing millions, like millions, really, like 10 plus millions, with a strategy on Bollinger Bands, RSI, and a bunch of trend lines. So the point is, it's not that it's not working or that the bigger banks have other things. Of course, they are able to make their own custom indicators. They have an IT department, they have a risk department. Like, there's a different things in there, but they are still using things that work. And the normal indicators, they work, big or small accounts, it doesn't matter. But if you start playing with them, if you start thinking that you are better, then you might make the best indicator settings here ever for the current market, and then something like Corona happens, or there's president's election, or anything else is happening, and at that moment your indicator is not working because no one is using your indicator. So it's very important, in my opinion, to not change this kind of settings with the default indicators. Make sure that if you are changing them, you really know what you're doing, and that you're not the only one using that setting. That's basically my advice. Or become like mathematician and really write your own indicator. So something that's not out there yet, and become popular, and make sure you get into the indicator list that everyone is like, wow, I haven't never thought of that, but it's a genius move. So that's very important. Okay, deleting this one with backspace. So the cloud is a little bit thicker. The entry line from the Infinity tool is based on that, on the Tiki crosses, basically. Kooijman, Teikan-sen, and Kujan-sen. Okay, next one, CCI, Commodity Channel Index. One of the indicators that I really like to use is the Commodity Channel Index. Now, the Commodity Channel Index, or CCI for the short version, is basically an indicator that is giving market sentiment and volume at the same time, if you know how to read it correctly. I'm going to change the colors a little bit, if I can. Orange is okay, but the thing is very annoying. Okay, 100 and minus 100 are the basic upper limits, and we have a little bit of a background. So CCI also here, default averages 20, and I would also really advise you to keep that on 20. Now, what is CCI doing? Very, very shortly. I'm not going to use this blue one, by the way. So it gives a default between plus 100 and minus 100, but I'm going to do it a little bit different. So I'm going to make this one green between 0 and 200. And then I'm going to manually go from 0 . This is just to explain it, guys, so don't worry too much. This is just to explain it. Make it a little bit less. Oh, this side. Okay. So I changed it a little bit because what is the default is that that there's a plus 100 and a minus 100. So I'm going to also add those lines. So I'm adding a horizontal line here, nice and thick, and let's say black. It's very clear on 100, and then I'm going to explain it all to you guys. And here we are going to use another horizontal line on minus 100. So the default is coming with a band between plus 100 and minus 100. Now you have the 0 line in the middle, which is now very clearly split with green and red. Now that one, I mostly add a line myself, so I'm mostly keeping a default with that band between 100 and minus 100, and I just add a line to the middle. Now, why is the line to the middle so important? Is because if the price is above above 0, the buyers are winning the game. If the price is below 100, the sellers are winning the game. Now I'm going to check if I'm going to the 1 hour time frame. I think it's a bit more smooth to read, and that didn't work. Let me go back to 15 minutes. My red band is gone. Okay, we go to the hour, and let me add that one more time. From 0, 1 to minus 200 to... Okay, here we go. Now, so what is basically the game is that as long as the price, this CCI indicator, is above 0, the buyers are winning, and it means that we have an uptrend. If it's on the bottom side, it means that we are having sellers that starts to win. The 0 line is the crossing point to have the buyers lose from the sellers. The 100 and -100 lines are mostly used to show a band where there's fighting going on, and above 100 and below minus 100 there is a clear winner. So let's just go to the charts and look at this current green, green, green moment. We already see here that here the sellers were in a little dip. At that moment, we see that there is so much volume in the uptrend. It's a couple of hours that it completely switches from the sellers to the buyers. It even goes to the buyers have the only rights, but then it goes very quickly back to zero, and the sellers are trying to push their last volume in the market to push this market down. They don't keep that for long because it goes back to the buyer's market. The buyer's market are pushing it up. They are pushing it above Ichimoku. And above Ichimoku, there is a certain part of the game is won. Then they keep growing, and you see here even that the line is going down, which means the buyers are winning, but they are winning less. The market is also reacting a little bit downwards, but they're still going up. So the point is that as long as they are above zero, there will be pullbacks. It's not that there's no pullbacks, but when there are pullbacks, it still means that they are creating, let's say, a new higher low. So you have a higher high, then you have a higher low, a higher high and a higher low than the previous low. There needs to be pullbacks also in an uptrend. But as long as we are making higher lows, we know that we are still in an uptrend. It's a healthy pullback. And that's what you can see here. You see that this market is staying in the uptrend. It's going up, down, down. Here we have a little moment of doubt. We are recovering. And then it really goes into a dip, and that's here the dip that you're seeing. So this is the time to stay in an uptrend. Then here again we are staying quite a while for 2 days, because I'm in the 1 hour time frame now. I maybe zoomed in a bit too much for you guys. But here you see we are going into an uptrend. We have green, green, green above the cloud, and the confirmation is yes, we are above plus 100. So in that band between 100 and 200, that's where we know that the buyers are winning. They are seriously winning. There's no battle anymore. They are seriously winning. And of course they are battling sometimes a little bit here with the sellers, and then they are really winning again. Above 200, the reason that I stop at plus 200 is because they are maybe winning a bit too easy, which means that the sellers are gaining their strength. So let's say you lose, you are winning ground on a battlefield, and the other ones have been pulled back to regather their strength. If it's too long above 200, which mostly doesn't happen too long, it's kind of the peak. So it means that the sellers are going to come for you. They are coming to get you in this case, in this uptrend. So when they do, you see that the price is going down, 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 down. The CCI is going down, and here you can find yourself an exit. Look at how beautiful that exit is on the price chart above. So you went in, and just to see how that's really looking, we have green, green, green above the cloud. That's our entry, and our exit is when the price crosses zero at this hour, which means exactly there. Alright, this is your trade. You have the entry above the cloud, green, green, green above the cloud. And you have your exit when CCI crosses the zero line. You have a perfect entry and a perfect exit. It's a 2-day trade. This is about 40-hour trade, and yeah, it's beautiful. And this is how you can use CCI. Of course, you want to see in this uptrend, you constantly want to see, because here you have another one, green, green, green above the cloud. The buyers are winning again. So you can go in from here, and you stay in, you stay in, you stay in. Here at the top you can see CCI is too high. It's above 200 and it might start dropping a bit. Then here we have a weekend. It comes down, it comes down, it comes down, and here we are actually finishing. So that trade would start here and it would finish here. So let me zoom in on that a bit to make it more clear for you guys. So these are your two trades. You have your entry. Sorry, the entry is after coming out of the cloud, infinity style, and you are out when CCI drops under 0. You have green, green, green above the cloud again when CCI recovers. So you just don't have to go through the pullback, and then this is a very small one, but it can also be a big one, and then you're out again here, or you go out here because you see that CCI is too high. Then you have a pullback again, and then here we have a new entry point. So you see here CCI is winning, so you can, even during this candle, you need to go to the 15-minute or 5-minute to see, but you, during this hour, you can enter, and then you keep going, you keep going, you keep going, you keep going, and then you have your top, and then here when it goes 0 again, you get out. So not a really big trade, but it's a very, very, very good indicator to see what you can do with the volume. Now, of course, it's exactly the opposite when we are in a downtrend. And when we are in a downtrend, you want to see the price in the red zone between 0 and minus 100. There's a battle, but the sellers are winning. Between minus 100 and minus 200, there's kind of free, like empty battlefield, and the sellers are just running. When it's minus 200 and lower than that, they are winning too easily, and there will be pullbacks on CCI, which means there will be pullbacks on the market price. And then you can get out. You can just say, okay, I'm really, really happy here with my top. Because if you're trading to the tops, this is your entry, and here's your end of the top. Then you have your entry, and you have the end of your top. So I'm drawing it, as you see here down. I'm drawing it when the end of the top. So when the top has its peak, and the next hour is down. Here as well, you have your top. This is the top actually, and then you have one almost flat, and then the next candle is when CCI is really down. You see that candle is not even really down yet. It's more of a doji candle, and the doji candle is created because there's a fight. You guys know a doji candle means fighting. It means that there's no winners, there's no buyers anymore, and there's a serious push down from the sellers, and it can mean a reversal moment. Now, these are the reversal moments. Reversal, reversal. Also on the bottom, reversal. If you feel you want to get in quickly, you can get in here, because it's the end of the reversal. It's a reversal from the bottom back up, and we are in an uptrend, so we are only buying, we are not selling. So that's what you can do, but personally I like to wait till the 0 line is crossed, so I know that I'm not alone buying. As I said, there's big players in the market. Those big players are also people. I don't want to be alone. I want to buy when others are buying. I want to sell when others are selling, but not when they are done buying or when they are done selling. That's when retailers are losing money. So there's a lot of people that start buying here. And it's a very good example. I got a message 2 days ago when Bitcoin was on its highest price ever, of a retail investor saying, "Boss, should I buy Bitcoin?" And I was like, yeah, 2 months ago. Like, you should have bought in October. and you can buy now because at the end it might go up, but you might buy on the peak, you buy too high, and then you will get a drop. So it might be better to, like, it's very hard for me, especially for crypto, to make a decision for someone else. I'm buying on a weekly basis, so I'm not having that decision stress. But if I would say no, you should not buy right now because there should be a pullback coming, it can also be very bad advice, because if there's no pullback and it spikes to 50k, that person said, like, you see, I should have bought. So especially with crypto, no one knows exactly what happens when. So yeah, Bitcoin might go to 100k, but does it go there now? Does it go there in a straight line? It doesn't go there in a straight line. It's still a financial product. But you don't want to buy on the top. So if you're buying here, then you know that you shouldn't be buying, because the CCI is telling you, we have been buying, you're late to the party, we are going down now, we might get a big pullback, and then we might go buying again. But you want to buy here, and you want to buy, for CCI wise, you want to buy here, but we want to have our Ichimoku confirmation on the right side of the cloud. So we are buying there. And I think that this is really going to help you guys. So CCI is one of my more favorite tools. I don't know if it's going to be by default. I don't think it will be by default in the tool set from Infinity. It might be that we will be trading more with this in 2021, but it's really a nice tool to have and to add to your indicator list. Now, looking to all the other lists, there's a lot of them that I know. There's also a bunch of them that I don't know and never used. There's a lot of people who are using RSI and stochastic and things like that. They're also at MACD. They're also really good additions if you understand what those indicators mean. If you want to continue on the trend, or when you want to see, let's say here, uptrend, 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 the end of the uptrend. And you can see that on RSI, stochastic, or MACD as well. So I hope that this session really helped you guys. I'm going to finish the session a little bit earlier than normal. I want to thank you a lot. I'm going to check if there are some questions, and then we finish the session. Can you look at SPX? Not for today. What are the thoughts on the awesome oscillator? So I personally never used that one, so I don't know if it's in here. Yeah, it's in here. So what I would say is that oscillators like stochastic MACD are also oscillators. Like all of them, they give you a hunch on the market, and that's the most important. You need to find your indicator set that gives you your hunch on the market, when to go in and when to go out. And some indicators really help when to go in, and some indicators really help with when to go out. And it's rarely that the indicators are giving you both, because what you see with Infinity is it's an indicator set. There's like four indicators in this. There's a major trend line, a minor trend line, there's an entry line, and there's an Ichimoku modified cloud. They are giving us entry, and they are giving us exit. You can add extra indicators, volume, market sentiment, or oscillators, and they might just give you a better hunch on the market. And that's the real goal, to have the biggest hunch, to know when to go in and when to go out. Guys, I want to thank you so much for joining today. I know it's between Christmas and New Year. It's a holiday season for a lot of people. Some people just need to work. Some people can enjoy, relax, and get ready for 2021. I remembered for tomorrow we are going to look into all kinds of different financial products. We are not going into detail on any of them, but I want to show you guys on all the different products: oils, gold, so US oil, UK oil and the difference, gold, silver and the difference, the crypto markets, and also we will go over some indices, and we will go over the exotics in Forex. And then it's up to you to choose what you want to trade and how you want to specialize, because you are not going to be a crypto trader, oil trader, gold trader, a forex trader, and a forex exotics trader. I at least do not recommend that. I think if you're a good technical analyst, you can analyze everything. That's what we are going to do tomorrow. But if you really want to get good in something, you want to specialize at least in a certain category. And even from forex lists, some people are really specializing in AUD, really specializing in euro, and even technical analysis, not only fundamental, because from fundamental level you need to specialize in one or two or three products, and I mean individual pairs. But from technical analysis, you can technically trade everything, but you still need to know the exact characteristics of that specific financial product. So I do advise everyone to specialize. Tomorrow is an orientation session to look into other products, and maybe you want to add, next to normal forex, major forex pairs, you might want to add one of the others to make 2021 your game, to add gold, silver, to add oil, to add crypto to your trading knowledge and trading portfolio. And I really hope tomorrow's session is going to be very useful for you guys. So I hope to see you guys at 23 hours live on Go Live again. If you have any questions, drop them to me. We are going over them also tomorrow. And if you're watching this later on YouTube, then you can also add all the questions below in the comments, and I'm going to make sure that they are answered by someone from the community or by myself. Thank you guys so much, and I hope to see you all tomorrow again. Bye bye.